welcome to La Prinzo Wealth Academy. My name is Prince Kilowe, and in this video, you are going to be learning how to trade in a ranging market. Remember, we have talked about trends, how you can trade in a trend market, uptrend, downtrend. You all know about what uptrend is. Now, there is one important market that you need to also understand. It is called the ranging market. When the market is ranging or market is consolidating. Let me write it on the chat board. Let me write it on the chat here so you understand what I mean by ranging. So we are going to learn how to trade in a ranging market. Alongside, we are going to learn how to trade the ranging market, and we're also going to be learning how to trade it with a particular candlestick formation. Remember, we have different types of formation, but in this lesson, you are going to be learning how to trade in a ranging market with bullish or bearish engulfing. So the first thing you want to do is to know what is a ranging market. A ranging market is when market is not. Remember, the trending market is uptrend is when price makes series of higher highs. Like this is, you can say this is an uptrend because price is doing higher high, higher high, higher high. And then in a ranging market, in a downtrend, the same thing is when price make higher highs, higher lows, and lower lows. But in a ranging market, price does not do all that. What price does is in a range between two zones. So let me just look for a ranging market for you to understand what a ranging market is all about. Okay. A ranging market is when price is cut off in a zone. Okay, let me say this is a range market. Let's say here is a range market. Good example of a range market. We have what is called shopping market. The shopping market is when you don't want to get involved, but you can actually make a lot of money trading range, because usually price in every market or price trends only 30% of the time. Most of the time price ranges. So this is a clear example of a ranging market. Look at how it looks like. All right. So now, how do you not trade in a ranging market? The first thing you want to understand is to go to your time frames. For instance, you're using the 4-hour time frame, and this doesn't matter the time frame you're using. But like I told you, the rule of price action trading is to trade with a higher time frame. Know what the price is doing with the higher time frames. So when you see the higher time frame, whatever thing is giving you, if it is ranging, if it is trending, you want to see that as a valid information, because investors, traders, real traders, what I mean real traders, you and I, we are just 20% of the market traders. The people who are making moves in this market, they are not using 5 minutes or 10 minutes or 15 minutes to look at the charts. They are looking at 4 hours daily, weekly, to see the movement of the market. So when you see a ranging market like this now, this is a strong support. In fact, you can call this a supply zone, supply and demand zone, because this is a massive movement. It's a strong support and resistance zone. So once you have seen a strong support and resistance zone, you want to take advantage of that zone and make profit. Now, how do you now make profit from the ranging market? You trade. In this example, I'm going to be showing you with the candlestick formation you have learned. So let's use bullish engulfing, bullish and bearish engulfing candlestick. Remember, engulfing candlestick is when okay, let me bring that slide on engulfing candlestick so you understand once again about engulfing candlesticks. If you have not been Now, this candlesticks, this ranging market, it doesn't matter any candlestick, but in this example, I want to use the engulfing candlestick to explain this, how to trade it. Now, this is what you call bearish engulfing. You already know about this candlestick based on fact that you have watched the video on candlesticks. So this is what they call bearish engulfing, and this is what is called bullish engulfing. So how do you not trade it with this kind of candlestick pattern? All right, it's very simple. Once you have discovered that the market is ranging in a particular zone, tight, right now the price is tied between these two zones, between here, right? You want to lock it, so I'm going to lock that. Price is ranging between these two zones. These are the touches. Once you discover it touches like this, you want to take advantage of that kind of movement and make profits out of it. So I'm going to be showing you how. Okay. All right. Now, this is what is a clear example of a ranging market. Now, price is locked between these two ranges. So once you have seen something like this, you want to take advantage of trading with this candlestick. Now, this is what they call bullish engulfing. You sell from the down, from top, and buy from the top. Like this now. This candlestick formation is a clear example of bullish engulfing because the candlestick, the first one is bigger than the first. This second one is bigger than the first one. So this first one completely engulf. This one is bigger than this, though this is not a complete big engulfing, but the best example is this one here. This one here is the better example. Is completely engulf this candlestick. So once you have seen your market locked in a range like this, what you want to do is to wait for candlestick formation. Once price touches this zone, let's say you were watching the price when it was here, it went up to this zone. Maybe this is where the range started. It went up to this zone, it came down. Now price has come down to this place because of the fact that you have seen that this place is a zone. Look at it here. Here it was resistant before it broke through. Right? It must be on a zone. You can see that here it was a resistance, it was a support here. So now you know that this place is a tight zone. Let's go back further again. Look at it, is a zone, all right? So now that you have seen that this place is a zone, as you are watching the market, if price has touched this zone, this is also a zone. Look at the 1, 2, 3 touches. These are 3 touches. What you want to do is to wait. Once you see this touch happen and price is approaching this zone, because you don't know what will happen here when it was coming down. You are watching this market because you are expecting that price to turn from here. There are some people who are very aggressive traders who want to use a sell limit. Remember, sell limit is placing an order, I mean a buy limit rather. When price was coming down here, they want to place a buy limit order and take advantage of this zone and buy. But now we are using a candlestick formation. So this is a zone. Price is locked between these two zones. I'm going to show you how you are going to trade the breakout as well. So you want to look at for candlestick formation like engulfing candlestick. That is another one you are going to use. Very, very, very good candlestick formation. That is this. That bullish engulfing. All right. So if I look at this now, look at this. This is what look at this. This is a clear example of a bullish engulfing. So once you see this bullish engulfing candlestick, what you want to do is to place a buy, but you must allow this. For instance, this is 4 hours time frame. It doesn't matter the time frame you are using, but this is 4 hours time frame. Now you have to allow this 4 hours time frame to finish forming. Once it finish forming, you can do two things. You can place a buy order because it's a zone. You can put a buy order here. It's a zone. You can do a buy stop or instant execution. For me, I like buy stop. Now, when you put a buy stop here, where do you put your stop loss? Your stop loss will be below this zone. Your stop loss will be down here. Let me use because of this last touches, you don't allow this touch to happen, so your stop loss will be below because of what has happened in the past. Be careful when you see such kind of uh, touches because this is a zone. Look at what price. The price was here on 18th January 2020, 2021. It gave you a bullish confirmation candlestick. It went up all the way here. Now the price is now here again. So you want to put your stop loss below. If there was no touch like this, normally your stop loss, but it shouldn't be too tight. If it is too tight, it can just wipe you before going your direction. But so you have to ensure that the stop loss is not too tight. Let's say for this particular example is here. But so for somewhere like this now, this is where you should have put your stop loss because of what price did here. Now, if you are placing a price an order here, ensure that your profit is bigger than your stop loss. Ensure your profit is always times 2 or even times 3 of your stop loss. So that in case the trade go against you, the next time you want to trade, your money is not always, whenever you have placed a trade, always ensure that your profit is times 2 or 3 of your stop loss, of the risk the amount you're risking. Let's say for instance you're placing your trade here. Your stop loss is between let me see, that's about 24 pips. Your take profit should be at least the next zone. The next zone is not that you put the take profit on the zone, but your next zone, it should be close to the zone because sometimes price may just get close to the zone and it just start running back. So if you put your stop loss on the zone, this red line, bam, bam, it doesn't happen like that. You may be surprised that price will just maybe come to this place and then start going back again. Your profits become loss. So ensure that you put your stop loss on the zone, but before the zone you're seeing, it should be times 2 or more of your stop loss. So you're risking less and making times 2 of that money is a strategy you use. So this is a very good example. This is what you call bearish bullish engulfing. So once you see something like this, you want to take advantage of that. Even this is a good entry point, though the engulfing is not strong, but it's also very good to take this trade. This one is also good to take. Let's look for another trading signal here. This is also a good one. This is also engulfing. This one is bigger than this. Remember, it started from here. You are going to add the wick, of course. This is also engulfed. This one is bigger than this. This is also a candlestick formation. So you want to take a trade at the close of this particular candlestick. Let's go back to 4-hour time frame. 1 hour rather. I'm not seeing this zone clearly defined on 1 hour, so let me use the 4 hours I'm using. You see, that's why higher time frame is always the best. It gives you more clarity about what the market is doing. So I prefer higher time frame. Absolutely, it's better to analyze the market based on higher time frame. So I'm looking out for another tight corner that we can use. Okay, this is another example of zone. This is another zone that we can use. Look at these two zones. This is a trading signal. This is completely bullish engulf. You can see what price did after this candlestick. Price boom, even break through this zone before going up. This is another bullish engulfing candlestick. So you want to be looking out for this candlestick pattern to always take your trading decision. Let me look for another pair. Let's look at euro. Let's look at AUDCAD. Now, what I'm teaching here applies to indices. What I'm doing here, I'm just using this price action trading with currencies. It doesn't mean that it doesn't apply to indices. If you apply the same principles with indices, you will have the same result. Let me show you what I mean by that. With this is boom. This is boom 500. Okay, this is a boom 1000. Price usually if you look at this price now, it has locked between these two zones. Look here, this is a zone. This is also a zone. You see, once you see something like, look at what, for this particular example, this is where you are supposed to take your trade. But that doesn't mean the zone cannot be broken. Like now, this zone has been broken down. It has a price broke through the zone. I will teach you how to trade breakout as well. But for now, let's focus on trading a zone. This is also a zone. This thing applies. It doesn't matter the kind of market you're trading. It happens even in the stock market. You know, when you are trading with zones, you have clear direction of. Now price is locked between these two zones. They are very, let me remove this is not too pronounced, but it's also a zone, but it's not as strong as this one. This is a zone. This is a range rather. This is a range. Price is now between these two zones. It went up here, it came down. It went up here, it came down a little bit. It went up here, it came down. So price locked in this zone. If you look at this trade now, this is a price action signal. You are supposed to take the trade, put your stop loss down here. Put your stop loss down here, and then take your profit in the next zone. Like this is a price action signal. Look at this market. This is what they call bearish engulfing. Can you imagine? This is what they call bearish engulfing. So if you see something like this on your resistance zone, the buyers, it means that the sellers are ready to push the price down, because this is a clear turning point. It's ranging between these two zones. If you look at here too, look at what happened here. This is also a bearish engulfing. Look at another signal here. This is also bearish engulfing. This is your price entry point. After this one forms on the tight zone, you place your trade. You can see how much money you would have made from that market. Let me look at this is. So let's go back to the currency pairs and analyze our market with currency pairs. So the same principle apply to all these other indices that you are trading. Let me go to weekly first and clearly define zones. Then I will now know if the market is ranging or is trending. You have to know the structure of the market. Okay, let's go back to 1 week, 1 day rather. Okay, I want to show you clearly defined ranging market. There is a difference between ranging market and shopping market. Like this one now is a shopping market. This one, this place is a shopping market. You want to stay out of this place is the shopping market. Here is not good. Shopping market is different from a market that is ranging. Ranging market clearly defines zones. Market to run between two zones. So let's learn to stay away from shopping markets and always look for ranging market to trade, because in a ranging market you can make a lot of money. In a ranging market, I'm looking for a good ranging market. Like all year, these are all shopping markets. It's not good to trade all year, but let's look for trading ranging market. Okay, maybe you can look for another pair to look for. Let's do USD card. Let's do USD card. Okay. Okay. Sometimes you will see a market that is ranging in a higher time frame, but if you take it to a smaller time frame, it may look like as if it's trending. Now, if you look at this market, it's like a range between these two zones. Let me lock it first and let's find out. This is a zone. Can you see that it's a zone? This is a zone. And this is also a zone. So let's bring this zone. Let's have another zone drawn here. So the price is ranging between these two zones. Let me go back to 4 hours time frame. Right, this is 4 hours time frame. And then let's also draw with 4 hours time frame to discover these zones more and more. Let's see them. Let's see them. This place seems to be a zone. So even here, the market is like on a, this is also a range. This is also a range. Let's also draw our line on this down here. Remember, support and resistance is not a straight line, it's a zone. So these two can be used at the same zone. Here we are adding the candlestick. Here we are adding the wick rather, but here we are adding the body. So let's say this is our zone. All right. Now you have seen clearly that okay, all there is a zone. All right. Now you have seen clearly. You can also come here and put your line here. These are all the same zone. This is the same zone. So price is now on this zone. Once you see price on this zone, you want to look out for bullish engulfing. For instance, now this is a confirmation candlestick for this market. This is USD card. This is a confirmation candlestick. Why? Because this one completely engulf this one, the last one that is coming. So you can put your buy. If I'm going to take this trade after this class, this Euro USD card, I'm going to put my buy stop here and then take my profits on this zone. I'm going to take my profit here about 60 pips, though the stop loss is too high. The stop loss is big. That's why sometimes it is good you come back to a higher time frame. The stop loss is very high, very big. Between year and year is even more than the take profit. But this is an example of what I'm talking about. You want to look out for engulfing candle. This is a bullish engulf. This is a straight signal. For you to make money from this trade is you can buy one instant execution, or This market will come to this zone. That is for sure. I know it will come to this zone, but the risk reward is bigger than the profit. The risk reward is the risk involved is bigger than the profit. Rather, the risk involved is bigger than the profit. That is my fear for this trade, because you are supposed to trade a market that your risk should be always almost times two of your profit. Your profit should be times two of your risk amount. For instance, if I want to take this trade, my stop loss should be, if I place a buy stop here, my stop loss should be here. That about 80 pips stop loss. But let's measure my take profit. It is not up to my take profit, so the trade doesn't worth taking. But this is an example of what I'm talking about. Professionally, this trade doesn't worth taking. That is why sometimes I recommend that you use a smaller time frame to analyze your market, because if this is the area we are, let's say I'll go back to 1 hour time frame. Okay, now this is 1 hour time frame. This is 1 hour time frame. If you were to use 1 hour time frame, all right, this is where you would have entered. This one here, this, if we are to use 1 hour time frame, this is our entry candlestick. So you can draw your zones, you can know your support and resistance zones, supply and demand zones, but during the entry, it is always ideal you use a lower time frame for an entry, because of risk reward ratio. So now this would have been the entry point, because this is an engulfing. This one is bigger than this, so it has engulfed this one. So I would have taken the trade from here. If we have taken the trade from here, right, to probably our next take profit would have been take profit. Let me Our take profit would have been from here to this zone. That's 123 pips to a risk of about 29 pips. That's the secret about trading with your trading, going back to a lower time frame to place this trade. This trade right now is late for me to enter because the stop loss is big. So I will not enter this trade. I would have entered this trade with this time frame. Like here, this is also a good entry. Apart from bullish engulfing, if you see all this pin bar or hammer, whatever you call it, these ones are also good entering points for this market, because the market is ranging. So once it dashes this down, this support, this is when you want to buy. Let me delete all these things. So you buy from here. You buy from the down. Write it. You buy here. Then you sell here. You buy here. You sell here. So once you discover a range like this, a range market like this, you buy from the top, you sell from the top. Rather, this is all selling points. You sell from the top. Look at it. It is zone. It is zone. See, where people are selling, because the way you are watching this market is the same way thousands of or even millions of people are watching this zone. Look at all these places. There are selling activities going on all here. Look at all these places. You know. So you look at for a ranging market, and then you learn to trade it with what you have learned from this academic candlestick formations to identify entry points and trade. This is also a good sell signal. This one here is a pin bar, is a very confirmation signal. Once something happens like this is your selling point. This candlestick is a selling signal. If you see something like this on a zone like this kind of ranging, your price has locked in between two zones. Now, how do you not trade if price breaks out of this zone? Because price can also break out of this zone. Price must not lock into this zone. It can also break out. So how do you trade breakout? It is very simple for you to trade breakout. Now, let's say price is here. Now, price can also break. What you want to do is whenever price break through this zone, let's say price do this. Price do this. Instead of going up, price now do this. Do this. Then do this. I'm not getting it drawing correctly. If price breaks out from a zone, don't buy or sell immediately. Trading, some people do that, but that's not the best way to trade. If price break through here, let it go. Let it go. It must come back. Trade when it comes back to a retest this zone. Let it come back for a retest like this. Let it come back for a retest like this. Then after the retest, if price does this again, maybe show you an engulfing, a pin bar like this, that is when you want to short that market. That is when the breakout is valid. Because that breakout could be a fake out. Price may just behave as if it's going to break down and keep coming down, but before you know it, it will come back to inside this box that you have drawn. So to avoid that breakout, to avoid that fake breakout, you want to ensure that this happens. If it breaks out the zone that you have drawn before, you have been making profit by, for instance, buying from the down, selling from the top, and price get to the down and break through. Don't rush and sell. That is the mistake most traders make. The first thing you want to do is to wait for the breaker to occur, but allow it to do a retest like this before you sell. This applies to indices as well. Not just for it, but any chart you look at. Let me show you an example of this on indices. Like now, as price is here, look at what price did. Look at what price did. An example of this is on this particular time frame. This price was locked on this zone. Price came here. This was this was this was I think January 2021. Price got here, right? He rejected. He got here again, second time rejected. But the last time, what price did was price broke through this zone. But what happened? If you jump in here, sometimes it could just come back against you. So what happened? Price went up all the way, came back for a retest. Look at what happened. It came back for a retest. It was after the retest that this price, if I want to trade, all right, I will trade it now. Not when price just break through the zone. You want to trade when price come back for a retest. So the same thing applies to uptrend. If price break through your range, price is in a range like this, and then all of a sudden you're seeing this kind of breakout. Let's say price breaker like this. Sorry. Let's say price breaker like this. You don't want to buy because price has broken through that line. Allow it to do this, to the zone. It may miss some time, but let it go. Just stick to your principle. Now, once you come back, you can now think of buying this market all the way and take your profit in the next zone. So this is how you can trade breakout. This is how you can trade um, range market. You buy from the down, you sell from the top, alongside with candlestick formation like engulfing, bullish engulfing, bearish engulfing. If you see this on the resistance, you can think about buying, selling it. If you see this on a support, you think about buying. But remember to always, even if you have drawn your resistance and support lines with higher time frame, go back to enter for it an early entry. It is better you go back to a lower time frame and enter your market with a lower time frame so that you can enter early and reduce your risk in the market. Like now, it is very high. It's a good trade opportunity, of course, but it's quite high based on my stop loss here. It's quite more than my profit. So I'm not going to take this trade because it's already high. So I hope this video has helped you on how to trade range and trading breakout. I'll see you in the next video. Thank you.